Your whole journey on understanding entries, why you keep getting stopped out, why you keep being right, but then you still get stopped out and it goes your way, which is the worst thing you can ever experience, is all rooted in you not understanding time and price theory. It's all rooted in you not understanding that time tells you when the price is going and price tells you where price is going. And if you can bring both together and combine them at the right time, you, my friend, are going to pass your funded accounts. You're going to make as much money as you know you can make, and you're going to start capitalizing on all the right trades that you make. Because first, as a successful trader, you must first become a successful market analyst. And some of you are great analysts, but you are terrible traders. And that's not only just because of the psychology, but because you don't understand the implementation of time with price. So in this episode, if you give me 10 minutes of your focus, in return, you're going to finally stop blowing accounts because you're just turning up at the wrong time, not because you're actually wrong. So are we ready? Okay. I don't know I'm giving you this for free. In all honesty, I know a mentor out there that's coming out with a few mentorships that's about to teach you this for $300. These information should be for free. It's on the internet for free, but people make it seem more complicated so that you can end up buying things. The only thing I ever sell is the bridge in order for you to become profitable using my mechanical system. I don't sell basics. As you can see, I have a 7-day free program that's in the Discord. You can join the Telegram and find that, or you can press the link in my bio, or you can read the description. I have the Telegram, which I've posted more alpha and more information and wisdom keys on trading for free than anyone in the CRT and ICT community, aside from ICT. Keep that noted. Now let's jump straight into it. These are the highest probability times that you can expect price to expand after sweeping liquidity or rebalancing an imbalance. Week 2, week 3, Tuesday, Wednesday, 9:30 to 10:30. I should actually change that to 9:30 to 11 a.m. and 3 a.m. to 5:45. Now, what you may not understand, which I will be teaching in the charts, give me a few minutes, is all of these times have something in common. And what they have in common is they tend to be the second candle of a weekly candle, of a daily candle, or of a monthly candle, or of a 4-hour candle. I'll write that down. Okay. Now, let's jump straight into the charts. I know some of you, you're like me, I like to learn visually. I hate when people just talk for too long. So let's jump straight into it. Remember this quote: focus on price, then justify it by the time window / time of manipulation. This time window. And we'll jump straight into it. Okay, this is the fun part. Showing you the implementation of the theory of combining price with time. This scenario is going to be the 3 a.m. to 5:45. Pay attention. As I've already told you, price shows you where the market is going, and time tells you when the market is going there. And for as long as you trade these specific times I've given you, 9:30 to 11 a.m., at 3 a.m. to 5:45, and also 7 a.m. to 9 a.m., you will be in alignment at the right time with the high time frame drawn liquidity and the order flow, and it will allow you to take full advantage of it and be in the move. You're not getting stopped out before it. So as you can see, if you don't understand the CRT, go watch my YouTube channel. Go watch the CRT video on my YouTube channel. As you can see, we swept this low, so we can expect for higher prices. Wick below means higher prices until this target is reached. Okay, keep that in mind. So now we drop down to the 1 hour. And on the 1 hour, as you can see, the 2 a.m. candle has opened, and it has opened low, right? And as it opened low, we tapped into this right here, or you can say we tapped into this rejection block right here. As you can see, we respected the mean threshold, the 50%, right? So we now drop down to the 1 minute in this case. And on the 1 minute at 3 a.m., what did we have? We had a low, we had an SMT, which is perfect. And we'll take this back. And what we're going to look for? Well, first, the SMT confirms the order pairing. The SMT confirms that smart money are in the markets, because SMT stands for smart money timing, which is the time in which smart money are engaged into the market. And the SMT is simply a tip off to those who understand when smart money are in the market, so that they can take full advantage of this trade. So we're going to look for the order block confirms the SMT, the IFEG. And if you haven't watched that IFEG video, that's my very first video that I ever dropped on this YouTube channel. Go and look at it. The IFEG confirms the order block and the SMT and the order pairing. And it confirms that we're in a trend change. So as soon as we have this right here, you enter your position. Okay, so you enter that position right here. Your stop loss goes below the order block, or it can go below the IFEG. I'm right here on this wick. Okay. As you know, we opened, and as I'd like to always tell you, mark out the open, mark out the close. Can't really see it here. Okay, mark out the close. Let's just say the close was 4:30. The close is actually 6 a.m. So let's just, you know what, I'll put it here. You focus on catching the low and closing at the high. Remember what I just said? You focus on entering at the low and closing at the high. The fixed variables, which is the open and the close, you don't need to focus on that. You know when the open is, you know when the close is. You're focused on the open, close, that's fixed. Now you want to catch the low and you want to leave at the high. Or you leave at 50% of the range, or you leave at a 1 to 3 or a 1 to 2, but it has to be fixed. You keep that in mind. In this case, we could just aim for this high, or we could aim for this high, or we could even aim for this high. For now, we're going to aim for this. I believe this is a 1 to 3. Let me just check so I don't do you a disservice. Stop loss here. No, that's not. So we'll do a 1 to 3. And simple. What time? At 3. The time of manipulation tends to be the second or third candle of a 4-hour candle. So that could be between 3 or the 4 a.m. 1 hour candle, or the 5 a.m. 1 hour candle. Those are late distributions. And that's where you're going to find the entry and the alignment with the higher time frame buyers and smart money taking it there, because time tells you where it's going. Time tells you when price is heading there, and price action, the PD arrays, the entry confirmations, order block, IFEG, breaker block, the BISIs, those tell you where price is going. But without time, you don't know when it's going there. And if you entered here, let's say you entered here, you would have been right in this situation. But let's just say you weren't, which happens a lot. And you entered at 2 on the dot, rather than at 3 when the time of distribution is, you would have got stopped out in most cases. Here you got lucky because of an SMT. Next time you won't be as lucky. But if you come at 3, you'll be lucky all the time. So that's how you align time with price, and that's the importance of time. Okay? And if you're out there at the right time, you're going to have the smart money timing, which is the SMT, which will also give you a further confirmation that you're here at the right time. So, what have you learned today? First, you need to understand drawn liquidity. You need to understand time frame alignment. You need to understand how to know whether whether the overall market and the order flow is going up or is going down, bullish or bearish. Yes. But after that, in order for you to capitalize on moves and be in alignment with the moves and not get stopped out before the move, you need to come at the right times. and those right times are what I had already showed you in the beginning of this lecture. Now, I have a special gift for you all. I've got 2 special gifts for you all. The authorfx.co.uk, you can find a free model, the NQ model, that I like to give away for free. You're not going to find there the gold model or the silver model or the pound or the euro model. Those are for the people that have invested in themselves, and out of fairness for them, I can't release things for free that people have paid with their hard-earned working money, and of course are utilizing to pass accounts from 50k to 600k funded, which is my highest student at the moment. Of course, I'm releasing seats 5, and I release 5 every quarter so that I can maintain the quality of mentorship, and so that there's not too many people where I can't communicate with everyone one-to-one. You can book in a call after watching the NQ model if you feel as though you need further training, and you have to ask yourself this one question: what is one thing that you could solve, one thing that you could master, that would increase the amount of funding you have, or increase the amount of payouts you get, and decrease the amount of time and stress you're having trying to figure it out on yourself? That one thing can be solved once you book in that call, and we see how we can tailor the training towards you. So that's the free model. Then you can look in the description or the link in the bio, in my bio on X, which is the author FX, and when you look in the bio, you can join the free Telegram. There's free videos, or you join the free Discord, which has the 7-day masterclass free, and it's the basics of the market with a little bit of advanced teachings, because I just feel like you're getting bumped if someone is teaching you the basics and not adding just the simple psychology behind it. I don't mind giving that away for free, and I'm sure my students don't mind giving that away for free, because it's the basics, right? But if you want the advanced, book in a call and let's see if we can help you. If you're not serious, please don't book in a call. If you're not ambitious, please don't book in a call. If you're not ready to listen, please don't book in a call. Because there's only 2 people that never make it, and it's the prideful and it's the shy. And free, and it's the lazy. And the lazy one is mainly the most one. And some of you aren't even lazy, you're just arrogant. You think you can solve it on your own. And some of you aren't even arrogant, some of you are just shy, and you don't know how to ask questions that will keep you poor also. I hope you live for as long as you want, and I hope you never want for as long as you live. God bless you all.